Good afternoon. I'm Brian Doherty with Total Farm Marketing coming to you on Thursday, December 23rd. This is our last day of the week for markets, which is typically not on Thursday, but it is this week because markets are closed tomorrow and then, of course, Christmas on Saturday. So, wishing everyone a safe and happy and prosperous new year. We'll get started with our disclaimer here. Markets entail risk. Understand the risk before you jump into any positions. Have good conversations with your advisor and make sure that you understand all the potentials in your positions before you enter, and then keep vigilant to manage those. Okay, pretty big week again in the grain markets, so we'll dig into that in just a second here. What I want to do is move over to our. I'll start with corn this week, and we'll move over to our corn chart here. And I'll start with the March contract. And as you can see, closed above $6, closed at 605 and 3/4. Solid week for the corn market. Good export sales today at 39 million bushels. Year-to-date sales 1,555 million versus 1,662 a year ago. So still running behind, but still really solid. Keep in mind where prices are. Good numbers. Expectations from the USDA are 2.5 billion. So we've got about a billion bushels to go and a lot of marketing year left in front of us. Corn had a good week. What's driving it? Drier weather in Argentina and Brazil would probably be our best reason for prices to move higher. So you've got that, you've got inflationary concerns, you got supply displacement concerns, and you just got slow farmer selling. Farmers are not selling in droves. The market moves higher. They're being rewarded by being patient. They're dribbling corn into the pipeline, but strong basis levels would continue to suggest that farmers remain somewhat light in their sales. What that tells us too is that there may be this question, this lingering question about 2019 crop, 20 crop, and then carry in. Certainly talked to a number of farmers this year that were offered good basis levels at late summer, and so they cleaned out the bins. So it may be that there just isn't as much corn on hand. We'll see. I think it's primarily, though, the weather in the southern hemisphere, and that's your driver there. So we'll look at a good week in the corn market, good close today. We'll switch it over to soybeans. Very impressive week here. This is the January soybean contract pushing above this brown line, the 200-day moving average. We've got an inverted head and shoulders formation. That all points to higher. I like working with the March contract right now. And as you can see, the March contract is beginning to sort of, let's say, maneuver and take off. I'll blow this up a little bit. Really solid week here. Big, strong gains, double-digit gains on the week for sure, and reaching their highest level since back here in August above this downward resistance line here. 1340 and 3/4 is where the March contract closed. And if I put my cursor on here on the 14th, we were at 1243. So nearly a dollar rally in a little over a week. Pretty impressive. Again, the weather is the backdrop. Northern Argentina, big bean producing country. Brazil, Bayer being producing country, dry in the southern regions, or at least heading in a drier direction with the La Nina pattern. What's really pushing the market, though, here this last week into the bean complex is this March soy meal contract. You can see it's just exploded here, recently bottomed here in the 315-ish area, and now rallied to 400. So you can see that big percentage change there. It's very significant. Export sales today for soybeans, 30 million bushels. That brings year to date 1,405 million. One of the things I continue to mention is that we seem to hear from a lot of people who say, boy, these exports are behind a year ago. They just can't keep up. And I'd say let's pull the reins back on that a little bit here. They are behind almost 500 million. Keep in mind where beans were a year ago last fall. Trade agreement in place, phase one, big need to meet demand, growing hog herd in China. China was buying and front loading. China is buying beans continuously around the world. They're buying Brazilian beans for later delivery. The demand is there. It's just a different form. It's not that we need to buy beans today. It's what we call a just-in-time inventory approach, where when prices are high, China, you, me, probably everybody, no different. You kind of buy what you need, and you see what the next week brings, and then you buy. So the buying has been consistent. It just hasn't had those big droves in it. So I'm a little hesitant, and we saw last month on the USDA that I would say agreed with me. So I'm a little hesitant to argue that the export sales are not going to meet USDA projections. The USDA didn't change the projections last month, but we'll see. Big crop potential coming out of the southern hemisphere, but right now weather market certainly driving prices. Let's switch over to the wheat market. Another market that had a big week here. Boy, you'd think a week like this kind of quiet. Nothing but wheat prices rallying from near 750 to 815 on the July Chicago. Kansas City, Minneapolis wheat higher. Kansas City probably led the way more on weather concerns. And again, big windstorm, crop condition concerns, dry weather. You've got lack of snow cover in the rest of the Midwest. You're heading into the heart of winter. Interesting conditions there. Overall, wheat world supplies tighter. You're worried about things like Ukraine and Russia. Is something going to happen there? We're going to break out in a war. Is there a war going to break out? Is it going to just go by the wayside? World exportable supplies, milling wheat on the tight side. So the market continues to be volatile and show strength. The US dollar didn't really do much this week, one way or the other. It did finish, it looks like, on a soft note here this week, but overall consolidating. So big long-term uptrend. So pullback in this could really maybe ignite the export market as well. And that's one of the things that we talked about corn and soybean exports. One of the things that may be holding exports back, and in wheat as well, as the dollar has been higher. Again, really highlight that meal market in the grain complex is something pretty special. When we look over in the energy complex, I just want to bring up the March crude oil. There again, good recovery this week in crude oil futures, and you're going to see where the overall trend is trying to turn back higher. You've got winter weather. You've got things right now that have this crude oil market really advancing sharply toward the end of the week, providing underlying support, this time maybe for soybean oil, and the energy complex as a whole providing support for corn and the ethanol grind. Move over into livestock. Another banner week for cattle. Big, strong finish today. This is the April contract approaching contract highs. Again, expectations for good demand to surface. We'll look at the front month December here and just take a quick, rational reason why prices probably drifted. They, one, were probably overbought. Two, put a negative signal in. But this is right in the window when this whole COVID and Omicron really has the market concerned, and rightly so, about demand. Personal opinion here, put my own disclaimer out there. I don't think the consumer is overly concerned about Omicron. They're gonna celebrate Christmas and New Year's. They may do it carefully, cautiously. I don't see them not buying steaks and meat. Um, I think demand is there, and go into 100 reasons why, but I think the overall demand is there. The cattle on feed report today really didn't tell us a whole lot different. On feed 100%. Placement's 104, but the market was looking for 103.4. So slightly negative there. I would say it's immaterial. Marketing's at 105%. The average estimate is 104.4. Feeder market continues to move higher as well. Here is the March feeder contract. Nice recovery here. I shouldn't say higher as well, recovered late this week as well. Overall trend, if you look at it, it's really in a consolidation phase. High corn prices are likely going to keep the feeder market somewhat capped, maybe 165, 170 is tops. We still think that this April live cattle market, though, will breach into new highs and trade into the mid 140s. Want to take a look at the hog market. Can't give you a whole lot of directional bias there. You can see a lot of up and down, but finished again the week on a good note. So good investment money into commodities. Another market here that had another big week. New contract highs. Hook reversal today, but here's the March milk futures. And again, breaching $20. Look at this nice uptrend here. Good conditions there. Overall, we got a lot of markets that may be considered in the overbought territory. What I think you have going on as well is an inflationary concern. You've got managed money looking to push dollars into hard assets. They do that through the use of Futures contracts where they're leveraged in commodities. These are hard assets. These are assets that people consume. And the equity markets continue to hover near historical highs. So I think it's a diversification, more of a money play pushing into certain commodities. And then when you take a look at the beans and corn this week, you've got some weather markets on top of that as well. Hogs and pigs report today, I'll just mention all hogs down 4%. Not surprising. I think the high price of feed is probably pulling the hog, contracting the herd a little bit. However, breeding herd at 100%, marketing's at 96%. Again, reflective. We got to go back to all this COVID and contraction and euthanasia and things like that. Ultimately, though, high prices for inputs probably curb the hog herd. We've got deferred hog contracts approaching $97, $98 on the summer months. That probably doesn't allow for the herd to contract too much. That's a lot of premium in those back months, already reflecting some smaller herd expectations. So I'll go back to our disclaimer again as I wrap up. There's risk trading futures and options. Make sure you have good conversations with your advisor and understand the risks. I'm Bryan Doherty. I want to wish everybody a very Merry Christmas, a safe and happy New Year. We're anxious to work with you and continue to talk with you and help you with your marketing. We love to talk to farmers about shifting risk, taking advantage of these opportunities. We've got some very awesome markets to work with. We don't want to let those slip through our fingers. On the other hand, we could just be entering another phase of the bull market. So we're going to really want to talk to you about balancing that out, making a strong, balanced approach. With that, I'm Bryan Doherty. I want to thank you for joining us this week. Have a nice and Merry Christmas. And thank you for joining us today. Have a Merry Christmas. Thank you. Bye bye.